Sweep buyers at 0.4663.
What's up? What's up? We're gonna get going. What we got in here? The crew. You're gonna love this. It's gonna be. It's gonna be wild. It's gonna be absolutely wild. All right. So, I put together a little story for you. All right. So, one thing about crypto is that it's young. Okay. And I've been looking up the 309.6 year cycle. Okay, now within a 309.6 year cycle, you have a 51.6 year cycle. And within that, you have an 8.6 year cycle, all right, with 3 individual alternating waves as well. Now, the current cycle we are in, all right, is the South Sea Mississippi bubbles cycle. Okay, apparently. I didn't know. Okay. It ends in 2032. All right. So in that cycle, you get 51.6 year cycles with 1, 2, 3, 4, 5 waves in each. Okay. We are on the last cycle of the 309.6 year cycle in the last 51.6 year cycle with 5 waves in each. All right. Which happened to start in 2002. Really, for crypto, the third wave here would have started in about 2011 ish. All right, but we're going over XRP today, so really we're looking at 2013. All right, and so we have a peak coming up in 2024. All right, just so happens that the peak is going to be in 2024. Interestingly enough, the halving is in 2024. All right, so maybe we get a nice move in Bitcoin for 2025, what have you, okay? So there is this, all right? Now, I put together a little story. Now, I put the waves in, all right? So here, all right? I put the midpoints in, and so I have the dates marked out, okay? Here. And so you got like a midpoint, okay? Okay. You have the peak. You have another midpoint. You have the pi target for the cycle, whatever that be economically. That's an economic cycle. All right. You have a peak. You have, I'm sorry, the start. The green is the start. All right. You have, where'd my viewers go? No viewers. I don't care. We'll keep going. All right. We got a midpoint. We got the SEC filing case, all right, because that's going to be important. And we have another target here for that. And we have another vertical line. Where is this? Which one's this one? Yeah. All right. So then there's the pi target of the SEC filing case. All right. So let's just go to a 3-day for now. All right. So over here is where I expect the pump to happen, and I'm going to explain to you why July 18th specifically is that. Now, one thing about I've noticed is I have a gold EMA on here, okay? That's my 369 EMA, all right? So one thing I do notice is that when you go back in time, all right, that EMA marks the start of a new cycle for an asset, for a particular cycle. Whenever it comes out, it would start here. So this right here, over here before it, is a full cycle. So I go from when that EMA starts, all right? So right here, you have cycle 1. That cycle from the midpoint of this cycle, all right, remember, we're on the big cycle, on the big economic cycle, okay? From the midpoint of that cycle in 2013, just so happens to be August 8th, right? If you look here, all right, midpoint was August 8, 8, 8, right there, 8, 8, 13, okay? Cycle 1 happened to be 369 days, right? From here to here, all right? That's a full cycle, from the top to the bottom. That is a cycle, if you know cycles, right? Cool. So then I got from the start of my 1-day EMA, right? From the time it appears to the time of the pump happened to be 936 days on the 369 EMA on the 1-day time frame. So I thought that was interesting. So I'm like, all right, this is interesting. All right, I measured that out. I'm like, all right, I got to find out a little bit more about this. All right, cool. So then we got time till the pump, your daily accumulation range, right? So it happened to be, your 396 bars there on the daily. All right. And then you have the time to the top of your expansion and distribution phase from where it started to pump to the actual top was 296 days on the 1-day time frame. So you got your 3s and your 9s in there, right? And then I thought, okay, from 1 to 2. So that's level 1, right? If you guys follow Tino, right? Level 1, level 2, level 3, and all that good stuff, right? So you got level 1 on the daily. Going to level 2, 296 bars. Maybe that's the deal. I don't know. But so I go again. I go, all right. From the accumulation and distribution, right, to finish cycle 2, right? This was 1, 2, 3, 4 bars. I'm like, bro, these numbers, I can't, right? So I'm like, okay. So now I'm on cycle 2, right? So I'm not going to use the 1-day, right? I'm going to use the 2-day, all right? But I need a new EMA to follow, and I wanted to see when the 369 EMA would start on the 3-day time frame, all right? So I go to my day 2, right? And I have my 369 on day 2. That's cool. But I know for a full cycle I need the 3-day, right? Because a lot of the times market makers trade on the 3-day time frame, right? If you're a market maker, right? So I go, all right, I got my 3-day 369 EMA, 71 bars or 231 days on the 3-day time frame, okay? And on this time frame, it was 104 bars or 230 days from when the 3-day EMA appeared. So I'm on the 3-day at the time. All right. So I start measuring things out, right? And I got to find my 6-day 369 EMA, right? Because I like to use that. And it appears right here. Okay. That's very interesting, isn't it? Because when the 6-day appears over here, is a little reminiscent of when the 1-day appeared over back into here. Okay? So if you can look, you can kind of see that the 1-day appears and you get this behavior. All right? And then I go to my 6-day and I'm like, okay, I can see, prices reacting to this. All right? Cool. So I got 173 bars or 1,036 days from when it began, right, till when it bottomed in this range, right? So from the beginning of its birth to this bottom over here, the higher low, right, I have 1,036 days. All right, cool. All right. Now, I go to find my 9-day EMA, right, because I like the 3, 6, and the 9. So I go to show my 9-day. Interestingly enough, it appears right after the bottom during the XRP bottom. Yo, what's up, Revy? All right. So if you're with me, you're with me. If you're liking it, let me know. If you're seeing a pattern, I see the pattern. All right. So okay, I got the 9-day 369 EMA starting over on this side. So I had the 6-day start on this side. Now I got the 9-day start on this side. Interesting. Now I got some space in here. So I go, all right, well, let me combine them, right? So I go and I combine them. All right, and we got 160 bars on your 9-day time frame. You got 238 bars, and that didn't make as much sense. So I stuck on the 9-day. All right, so I got 160 bars here. Remember, we want to catch the pump. That's the whole idea of this, right? So, okay, I keep going, and I keep measuring some things out. And I go, all right, so in the first cycle, if you remember, the time to accumulate was on the 1-day time frame different, okay? So this is 210 bars here, all right? But remember, we're on the 2-day, right? Because this is level 1, this is level 2. So I go back to my 2-day. Remember, on your 1-day time frame, right, it was 936 bars for that time. So I said, I wonder if it's the same on the 2-day. So I go to my 2-day. It happens to be 936 bars in this range. I go, that's not a fucking coincidence. All right? I said a curse word, but whatever. All right, so we got 936 at day 1, 936 at day 2, following the 369 EMA. All right, cool. So from over here, we have time to expand and distribute, right? Because we know that this was distribution, all right? We have reaccumulation, and then we're going to have time to expand and distribute again. So we do expect this to occur again. You're going to say, why does that need to occur, right? Well, in the grand life scheme of things, if you take the 1 plus 3 plus 6 plus 9 EMA, right, over the course of time, right, on your 9-day time frame, you will get 369 bars. Okay? So with including where the one started and where this one ends, you get 369 bars total. All right? So you got all your 3s, your 6s, and your 9s in there. All right? And if you don't know what the thing about the 369, it's a Tesla thing. It's a time frequency thing. All right? It's a thing. Check out TikTok. It's there. All right? So now, I follow this guy named Martin Armstrong, and he uses dates to predict when things are going to happen, right? So I got a pi date that's possible and on the 3-day, all right? So remember, back in here, on this day right here, December 22nd, actually it was, I have it on the daily, right? On December 22nd was when the SEC put the case against Ripple. All right. So what is 314 bars after that? Right? So here you got 940, but if you go to your 3-day, 314 bars, which is pi, 3.14, is actually around July 18th. So I expect July 18th of this year in this level 2, right, where the 6 and the 9 are meeting, all right, to be a big day for Ripple. Whether it be good news, bad news, we don't know. We don't know if it's going to pump or dump or whatever. Who cares, right? So you got your pi cycle here. All right, now in this cycle, right, remember you have pi. Now this is the economic cycle. These dates correlate with significant economic events. All right, whatever it be. Okay, so for example, is this one of those? Right. He doesn't have one here, but I'll try to get another one up for you. He's got tons of these models, all right? But he always figures out something like with pi in the cycle that like changes things. So for example, like Trump was elected during one of the pi dates, and he said that he predicted it, but really he just knew when the pi date was. He doesn't know what's going to happen. All right, so I got this pi date over here for Ripple, and this pi date over here in the economic cycle. All right, so I went to my 36th day, and I said, all right, is there any confluence there, right? Happened to be, right, how many bars? Where are the bars? Oh, 51 bars. 51 bars. Remember, we're looking inside of a 51-year cycle. I said, all right, like, you know, it's not 51 years, but if this thing is going to die, wouldn't it need to speed up the cycle? Or last, I don't know, but 51 is one of the numbers, right? So I said, okay, that's interestingly enough. So from this pi date to this pi date, there is, 51 bars between each pi date. Okay, that's, to me, something, all right? Whether it be nothing or something, it's just some more measurements, right? So we got to start to manipulate. So the green here the green line, is when the cycle starts. All right, so January is the start of wave 5. So this is the 6th wave in a 309.6 year cycle, the 6th wave. In a 5th wave started right around January 20th, right before COVID hit, right before the big economic cycle hit. All right, so there's a start here, right? So I measured that out, and so from the start of the actual cycle to the date of the SEC filing case on the 36-day time frame took 9 bars. So I have something here, right? I think I have something. Cool. So I got a 36-day time frame with 9 bars from the start of the economic cycle to the day they filed the case on the 36-day time frame. Okay. Now, there is also a 248-day, right? Because 248 breaks down, it breaks down in time with the 51.6 year cycle with 7 extra days. I think that's right. All right, so I know I got to come over here and come over to my 248 because that's what I have planned out here. All right, cool. All right, so we got 5 bars here. I got 5 bars from here to here. All right. And then now it's getting really messy. So let me just take some of this stuff off here because I've already explained a lot of this, so we don't get confused about what part of the story we're at in the XRP case. All right, we get the whole there's 3 6s and 9s and math going on here. All right. So we got 1 bar back, 5 and 5. All right. So if that means nothing to you, it means nothing. Okay. But what that means to me is that from the start, from the pi date of the economic cycle to the manipulation or the SEC filing case, right? There's 5 bars with 1 bar in between, and we have 5 bars from the start of the cycle till the pi date on July 18th. You know, maybe. All right, so let's just take those guys off. All right, let's go on. All right, so that would be 12 bars from pump to pump to make that little plan, right? Because you got to plan these things out, right? When are the court dates going to be? When is the, this is, to me, it's not random. When they come out with the Hindenburg emails and stuff like that on certain days, right? Like, they have this stuff planned out. So to me, there's a plan. All right. So each cycle goes through a little bit of a phase transition. Okay. So let me come over here to my 3-day. All right. So you kind of have a little transition here. All right. And you have a little transition here. All right. And that would be, slightly significant in the grand scheme of things. All right. Because each time you have to have like a little gap time. All right. Because remember, it's a 51 year, it's an 8.6 year cycle. So you have like this little 0.6 extra in each 8-year cycle. All right. And you got to kind of incorporate that. All right. So in essence, what I'm saying here is that you have some significance, like with the EMAs and stuff like that, for these things to be occurring in here. All right. With all of these things combined, when you put them all back on, it's going to look like a complete mess. All right. But when you do combine everything, it does paint a little bit of a picture in the grand scheme of things. All right. Where when you come over and you go to, like, I don't know, something pretty that's like, like the 36-day time frame goes well with a lot of things. You got a lot of confluences here. All right. You do have a lot of confluence in the numbers. All right, on when things are going to be occurring, okay? And each time, the tricky part about this, then when I do it, is that the numbers look different on the different time frames, right? And so when I do my first cycle, I want to be on the 1-day time frame, okay? That would be my first cycle. It's day 1. I also use this too. By the way, I use the market maker method, right? And in the market maker method, he goes on to describe like Forex, day 1, day 2, day 3, and how Forex goes on 3-day cycles and stuff like that. All right. So I kind of incorporate that into it as well, just like from like a perspective of daily cycles, right? So when I'm on day 1, I'm on the 1 day. And so I use those numbers, 936 bars, right? Cycle 1, 369. The first real cycle after that is 936, and then I can go to day 2. Day 2, right, in the market maker cycle of things, right, you're going to have 936 bars to accumulate. But in level 2, it's more of a manipulative level where you can distribute, reaccumulate, and distribute again. Okay? And that's what this is right here. All right? And now, in order to do that manipulation, you have to have some kind of idea, all right, where you might get that idea when the pi target hits for the economic cycle, right? You will get the idea and then start to implement that idea, and then you would have another target for pi from the start of when you actually effed with the system to the end, which would be day 3, right? Day 1, day 2, day 3, right? Day 3, where you would get 314 bars from the time you started the manipulation, where you could actually accumulate, reaccumulate, right, and affect the actual thing of this asset, right, and have your effect on it, all right, to when you can actually catch a nice move. Maybe. I don't know what they're doing. I'm just thinking out loud. And now in the grand scheme of things, you have your overall cycle length of the 1 plus 3 plus 6 plus 9 EMA, right? To be done, not done on the 3 and not done on the 6, where you'd have 49 or 294 days, right? You'd have 369 bars, okay? Just like in level 1, if you remember, over here was 369 days. So how do you get from one full cycle, right, of 369-day cycle back here? Remember, 369 bars. This was 369 bars, right? Lasted 369 days. How do you get this again? How do you complete a full cycle? Now, the scary part about this thing is that, this thing kind of just went right back down. Hopefully it doesn't do that. Hopefully it doesn't do that. It doesn't look like it's going to do that. This little bit right here is not this big picture, right? So we can assume that that's not going to happen, all right? It's maybe like what could happen if it doesn't get adopted, right? This could happen here, but it doesn't. It's moving up and people are actually buying and trading this thing, all right? And so I kind of expect July 18th, right, to be a significant date in XRP's life based on that math. All right? Based on that math. I don't know. Let me know what you think. I might sound crazy. It's a 20-minute video. All right? And so, if you like XRP, and you're down with me, all right? I'll get rid of this stuff, and if you are interested in it, I mean, I'm looking for an entry on XRP. I know things are moving down right now, but knowing that date is coming up, I would want to have a trade in, right? Yeah, cool. I would want to have a trade in and possibly have some kind of entry, because I did not collect it at 36 cents, okay, or 30 cents. And when I watch XRP, the numbers aren't lost on me, like that 30 cents, 60 cents, 90 cents. $1, $2, or $1, $3, $6. I know Blockchain Backer has a target of absolutely makes total sense to have an entry, 100%. So we're looking for an entry right now, and so I'll go over that. I know Blockchain Backer. He uses the fractal patterns, right? And the thing about the fractals is I've seen him take the fractals, right, from like one fractal and he places it over, but like time if things get messed up, it kind of like messes with the fractals, right? So I take different fractals from different parts of the chart to piece together what the end of the level could look like, right? And so I took little pieces from different parts. $17, I don't know, maybe, but $12 is his target. So that would kind of give you that $12 target from the fractals that I took, right? From that, from what I was doing with the math. And then, you're going to get stopped out. So that's how you get your M formation, right? So you get your $12 target, hit the stops drop. That's, in essence, a possibility. And then it's day 3 up here, and then you end up back into consolidation, back into the range, or something different would happen, right? I just was playing around because there's just like a huge imbalance here in the chart that I would think needs to be filled, right? Half of this range. I don't know. We'll see. Whether it plays out or not, that would be great. Wouldn't it be cool if we get to $17 or $12 and you can come back and watch this video and go, man, that 369 stuff actually works, right? So some TA, I guess. Well, some TA. What did I do first? I did fibs. I love fibs, right? I think of fibs a little bit differently than some, right? But in essence, this is level 2, right? And so let's just throw them all on, and I'll show you. I'll just kind of explain, like, maybe how we're doing this. All right, so we got a pullback down in here, right? So we got this fib right here, right? So from this low, right, to this high, right? You got a golden pocket retrace, right? Not only the golden pocket, but you hit your 702, all right? You stopped it out, right? Hit the stops. One big stop out at the 236 extension here, all right? You hold 50% of this range on this fib right here, right? And now you're kind of dancing around within smaller fib time frames, all right? So right now, currently, the ones I have drawn out here, which are kind of based on the volume and not the price per se, because if you use Tino's method too, like you measure the stopping volume to figure out where the stops, what levels are gonna be stopping out next. So you don't measure the highs and the lows, you measure the frequency and speed of the candles to figure out where price could go in the future, because it's more of a time indicator than it is actually like just numbers and highs and lows, right? Because you have to try to measure speed and frequency at the same time. That's the point of the vector candles, right? And the point of the whole Tesla thing. So, right here, from what I measured from the speed and acceleration, right? You hit your one fib here. You could come down into this region here, right? So there's just a gap up in here, right? And that's no bueno. All right. On your 1 day time frame, you've now crossed your 369 EMA. Some people are probably freaking out or whatever. It doesn't matter, right? Because we know the support is coming in at the 6 and the 9, right? So on the 6 day time frame, you got some support down here at 42 cents, right? On your 3 day time frame, you got a rejection from your 369 EMA, all right? And of course, you're looking for support kind of down in this region, right? So you would want to see this hold, right? This is the ultimate level right down here at about 319, right, cents. But it's already come to that level, right? It's kind of already come there. When we got rejected from 58. See, that's why I think we are going to pump. Because people that do, well, I don't know why things happen, but if you're playing the 369 EMA, right, you would be buying here, right? When you start to buy when it appears, right? So buying, it appears, and buying starts, and buying, and selling, and buying and selling, and that's why we're getting this behavior, in my opinion. And then when it pins it, that's a huge buy. So when it pins the 369 EMA right here, right, that's your target. You knew this was the target. You're accumulating now because accumulation is going to start again. So it pins it. That's a huge buy. Where did it go to? 29738, whatever. It was a sell-off, but it wicked right back up. So you get that, maybe you set your buys at 30, 36.10 or whatever. Your buys are, in the threes, right? So you have, buy orders here. So price went down there for a reason, to collect an order at least. It was running here. There was orders stacked in here, right? There's probably orders stacked all up in here, and it's trying to get to it. Finally gets to it, and shifts out. And so what you end up getting is a nice W formation, all right, which is one of the things that we do look for in the structure of a market, is that nice W. I don't know where my path is at. I'm getting lost in the sauce with all these things on over here. Oh, there's my path. Right, so you get your nice W formation, right? One leg, second leg, right? Now this leg is lower than this leg, but it's still a W, all right? Where you get your rise over the top, over the neckline here, retrace to their first leg, right? And now you've gotten a rise level 2 in this cycle, right? Where we're looking for where to get in the pullback. So on your 9-day time frame, your VWAP is sitting here at about 40 cents. Your Lark line here, right, which is an EMA that's like, it doesn't lag very much at all, right? You can see like how nicely it reacts to price, right? You got nice pins there, right? Nice accumulation on the way down when it's hitting here. Accumulate below. You get another bottom 3 pins to the low. Come back up, right? You come back over the Lark line. I would kind of expect price to come down into here around 42 cents. However, crypto is wiki, right? So, you can go to your daily time frame, or even your smaller time frame, like the 12-hour. And one thing that traders will do, they'll put their stops in the gaps. All right. So if you ever wonder why you get a wick like this, right? It's because there's stops here. Why are there stops, right? Because they put them below high volume nodes, right? So here's a high volume node, right? Where's the stops? Where's the lowest amount of volume? Right there. So it hits the low volume, and price does not like low volume. It likes volume, right? So that's why you get a nice bounce. Just so happens to be around your 369 EMA on your 12-hour time frame. Nice bounce. All right. Really, you'd probably, if you're a 369 trader, you're probably using like the 13-hour or the 16-hour. So they're all right there. So you probably got orders stacked in that region, right? You got buy orders stacked in that region. You got stops stacked in that region. All right, and that's why price does that, right? So we can hit the stops of all the leverage traders and pick up the spot orders and bounce away and bounce away. Now, you do have some more gaps down in here that are kind of a concern on some level, right? So you got, first of all, this is a gap from over back in here, right? So if you pull this over from where I think the W started, I forget where I drew this gap out, and probably from where the W started. Yeah. Or it's your VWAP. Yeah, it's your volume weighted price. So, a lot of times they like to get their orders filled around that price, right? Around the VWAP. And I think I also had to go back in time and go from the beginning of the actual cycle, right? From the start, from the green line, all right, which would have started back in January. And so don't forget, like these guys have had this plan since the beginning of COVID, right? Which would have been back here around the 19th, right? And so you want to look where your VWAP is, right? Well, your VWAP is up in here because they like to get their shorts filled above the VWAP and their longs filled below. All right. So right here is your VWAP in the long part, right? So they've gotten their shorts filled up in the long term. So then we can pull it back and see where they might want to fill their longs in the short term. Right? And so you come back over and try to figure that out. All right. So right in here, there's a big gap in there. I probably have it marked out in a rectangle somewhere in here. Yeah. There's a gap right in there. Right? So that's one price point, 43 cents, so there's probably some stops in there. Although from back here, it already hit the stops. See, price came up into here, and then it came back down and stopped this gap out. All right, that's why you got this kind of behavior that's going on the daily time frame, right up in here. Okay, so right here there's stops, right? So they hit the stops, hit the stops, hit the stops, come up, hit the stops from the shorts, come down, because remember, they just hit the stops. People re-enter. This is people re-entering. Re-enter, re-enter, re-enter. I'm going back to the moon because it's XRP time. Bang, no you're not. I'm going to come down and collect, collect your collect your longs or shorts or whatever, your longs, right? Underneath the gap down in here, all right? And then they shift out. Why do they do that? Because people went short, all right? And so I just move this back over because now I've figured I've stopped people out, right? And I move it back over up into here. Cool. Right? And so come back over, find some more rectangles. I think these were fibs. Right. So, and then there's some horizontal lines here. So we got to be mindful of the wick. All right. So they like to fill 50% of wicks. All right. There's a lot of people sitting in profit here, but am I really that concerned about that wick? No, because not a lot of people got in on that, right? If you weren't trading the 369 on the 9-day, you had no idea, maybe, where price would end, and it wick down quick. So I'm not really worried about that, right? But on the daily time frame, there is some blue volume down here where they could come back into, where they do like to hit the stops. Although I do think that this is level 1. They grab the stops. They already stopped people out and they shifted out. So I'm looking for more of level 2, right? And on the 7-day time frame, there was a stopping volume candle. I think I found it, where price could stop from, right? So inside of the W, right, in here, right, this is kind of like where I expect level 1 to be ending. So like level 1 ends at the bottom of this right here, right? Maybe level 2 ends at the top of this right here. And these is level 1 and level 2. This the beginning of level 1 and then the going into level 3, right? So, somewhere around 38 cents, right? Which kind of makes a lot of sense. But then there's the top right there, right? 39 cents. There's your if you're a 3-9 trader, right? You're probably looking for 39, right? Because once they're looking at this thing as an M, all right? They're gonna look at this thing as an M, all right? And when it comes down, a lot of people will short on the break of the M, or they'll ladder in their shorts, right? Because what do they say? Wait for the retrace, right? So a lot of times, if you do trade that little M pattern, right, you'll see a break, right, and then you'll want to see a rejection from the top here, somewhere in the middle, right, where you would expect continuation, right? So what better way to trap shorts than to paint an M, right? And then when they're laddering in their shorts, they're laddering in their shorts, they're laddering in their shorts, and then you just keep continuing up higher and you liquidate them, okay? And you can distribute your asset a little bit higher. All right, that would be another idea. All right, so yeah, that's the 7-day. I kind of expect maybe a stop there, maybe in the wick. All right, and then the 7-day time frame, you got your 369 EMA running right across there. So maybe you're looking for, maybe your orders are here. Okay, you probably have orders there, somewhere in there. All right, so there's that. Yeah, the 50% of the wick, the 7-day stopping volume candle. This is like caution, like you don't want to see it really come down into here. All right, 37 cents, is not really an option. Why is that? Because when they come past the red vector candle, it means that they're ready to continue lower. You want them to see them stop. They should leave some part of the red vector. All right, if you do that, just like they leave the green vector up here, like the fact that they left this, right, means to me that they might want to continue higher. All right, although they did not leave anything on that one. All right, and you can see that from the past, like when they leave the vectors. So let's go to like your 2-day, for example. So like when they leave space up here, that's where their longs are. So they have long positions up in here at $1.50, $1.47. What I'm hoping for is for them to come back into them. All right, I want to see them realize their positions in the top here. All right, although they do have a nice short from this level, but you know XRP goes back in time a long time. All right, and you know we're looking for a break above here. Although you don't see anything there on the 4-day, but you know I don't know if it's on the 9-day. Yeah, so they do have positions here on the 9-day. All right, you have some green volume. They have longs built. Someone look. If there was a market maker on here, I wasn't in XRP in 2018, whether it was on a derivatives exchange or not. But if that's leverage up there, you know, that's something. The only concern I have about XRP is that normally they come back up to like the body. They left that little bit right there. So there's a little bit of the body left, right? But they collected a lot when they went back up into there. That's kind of a concern. All right? A little bit of a concern. But then again, they do that stuff to trick us. All right? So, what else was there? I think that's close to being done. So, yeah, just don't come past 37, in my opinion. You got these rectangles are done. And I think I want to just go over the bottom stuff. So, I was looking down at the bottom. So, you got market cipher here, right? I mean, you know, so on the 9-day, you got this nice blue structure. So like you got the nice sin waves on the 9, right? But we're looking for that big move, right? Which would be in yellow, right? So you come up, big move. The next big move should be happening somewhere up in here, right? Kind of like it did over here, right? So you got your blue and your yellow kind of meeting here. You got your blue and your yellow meeting down below. Remember, because like a big move means a big, you know, a big swings, right? So they get the big swings, and then you get the little swings in between, all right, in essence. All right, I think that was market cipher. I did it on the 9-day. On the other days, I think I looked on the 36-day. Yeah, on the 36-day, I mean, look, you got a lot of momentum to the downside. So you got 3 lows, but 2 highs. I would expect another high, you know? 1, 2, 3. 1, 2, 3. This thing is not just going to come straight down. I don't know what people are thinking. The XRP is going to go to 0. I see momentum, a peak. Momentum, a peak. Momentum, I would expect another peak. Why would anything change? I don't see why. Maybe, you know, in the 8-day, the 18-day, it's coming up. You got momentum, right? So just like you started off low, high, low, high, low, but this is, what do we know what's going on in this region? Those 2 lows, right, is that phase transition, right? So you got 2 lows, fine. Maybe you think it's going to happen over here, right? But I don't see that pattern, right? When I look at the pattern, I see little, like a momentum wave, a momentum wave, a momentum wave, right? And then a big move up, right? In this one, you got a momentum wave, kind of like a head and shoulders, a momentum wave, and a head and shoulders. So I don't know. It's just what I'm seeing here. All right, but your momentum is up, okay, and your money flow is coming up. Right now, it's like this, you know. It's got nice structure to it. Rise, retrace, rise, retrace, rise. That would be great. That happened over here. Well, this was a big big move, right? But it ebbs and flows, right? Money comes in, money goes out, right? And back in here, you know, I don't know, money flow works differently. You know, it's going to decrease over time, right? Because a lot of the money is made in the first cycle. So you make the most in the first cycle, you make a little less in the second cycle. So just because you don't see as big of a money flow over here, right, doesn't mean anything, right? It's just, I know people are going to be like, oh, well, there's money coming out. Like, no, that's not exactly how it works, right? The fact that we got more money in on this level up here is a good thing. There's more money here than there was over here, all right? To me, that's a good thing on the 18-day, right? So, yeah, there's more money coming in from the lows than there was at the highs, right? So that's a good thing. because I know people like to buy the highs, right? They got wrecked. The smart money reaccumulated money, and now more smart money is coming in at the lows, more than likely. All right, accumulation distribution. You've been accumulated quite a bit, right? You got some nice, and you get some nice divergence there, if you're into that kind of thing. All right, so you got, lower, deeper pockets. Let's just put it that way, right? More money is coming in over time, deeper accumulation, right? But the price is going up. So prices are rising, but people are spending and accumulating more of this. So when they say whales are accumulating, maybe they're right. I don't know. All right. So then looking at BBWP, right? Because we want volatility to come in. All right. So when you look in the 18-day, right, it doesn't really give me the idea. However, you can go to the 36-day and see if there's anything there. So you're at like one of the biggest lows you've ever had, right? So that means volatility is about to come in like hardcore. Like a big move is coming. Big move, right? So we can look for patterns on the smaller time frames, right? So we like the 9. So we look on the 9 and we go, what do we see? Is it similar? So here's the beginning of the cycle, right? Because remember, this is still cycle number 2. This isn't like different. So in the beginning of this cycle, looks a lot like the end. So the beginning looks like the end. Looks very similar. These two structures right here, very similar. They're practically in the same place. That is very exciting to me. This means that it's coming. To me, it could be coming, right? Where it would be a slight disparity would be like the 6-day. But the 6-day was back here. Remember, so we got 3, 6, and 9. The 6-day is where you would, accumulate and distribute, and the 9 and 6 is where you reaccumulate and redistribute. All right, in essence. All right, so very, very, very exciting stuff. All right, I don't care about hidden bullish and bearish divergence. If you're on the 18-day on your RSI, where are you at? You're fairly low. This has room to run. You had some nice bullish divergence coming across. It was hidden. Where you got 1, 2, 3 on your lows on your RSI, and you got higher lows. Not even that, you got tons of higher lows. 1, 2. See, it's a little bit different, right? This one didn't hit this one, right? A little sketched, but that doesn't mean it's still not a higher low. Higher low, higher low, higher low. Doesn't need to be perfect, right? These are 3 higher lows. Those are 3 lower lows. That's 3 drives of hidden bullish divergence on your 18-day time frame. All right? And so, are you breaking out yet? No. But where's your actual resistance line? Probably up in there. So you're really far away from a breakout. Okay? Because remember, back in here, you did break out, and you got a huge move, right? So where are you at there? Where are we at exactly? I don't know. It's a little slightly different. RSI's change, I guess. But, that's what you're looking for. All right? In essence, I don't know. It looks slightly different, but I'm sure that it just does. That's good. Hidden bullish divergence on the 18-day? Come on. You can't ask for anything more than that. On your 36-day, it's there. You got hidden bullish on your 36-day. On your 69-day. Nice hold of the lows. No break below. You're good. I'm looking for another hit. And this could come up less than this. That's fine. You'd want that, in essence. Right? Because then you can make your hidden bearish divergence. That's how they get everyone, by making it look slightly different every time. Word. Yeah. Look, you're above. You got a nice cross here on your 69-day. What else you got? 36-day. You made a cross above the red, right? And you didn't even get to the yellow yet. What do you call the mustard? Right? You didn't even get there. On your smaller time frames, yes. Are things sketchy AF? Yes. In your 4-day time frame, I mean, you're basically at support here. You know, but that's how they get you on the smaller time frames, right? How many guys shorted this line on the 4-day and then price spiked right back above it? All right. So I like the 9. All right. At the 9, you're holding trend, right? Maybe you come back down, touch the yellow, and when the 9 touches the yellow, because when is it? Today's June what? 28th, right? So by July whenever, right? July 18th, I think I said, right? Maybe you're right there. All right. Maybe you're coming down right into there under the trend. You know, just a little fake out and then come right back up. That would be dope. Right? So, I don't know. I'm kind of bullish on XRP at the moment. Of course, anything can freaking happen because it's crypto and it's the government and things. But, you know, when I do all of this and I do the math, right? And I do... Oh, I'm frozen. Whatever. Take myself off. I'm going to be ending the stream anyway. But yeah, anyway, look, when I do the math and when I do everything, right? I go, should I be bearish or should I be bullish? You know, like I think I should be bullish. I really do. I really think I should be bullish. Should I be concerned about all of this stopping volume and all these gaps in here? Yeah. But to me, that's just them protecting their positions. You know, they buy down here and they get the F out. They don't give anyone else a chance to buy down here. That 9369 EMA, I mean, that's a big indicator. When that showed up there and was on the other side, on this side, I'm like, all right, I think we got something here. So, you know, you just want to hold probably the 6, right? Probably want to hold the 6, you know, but you can hit the stops, maybe 39. I don't know. So what's around there? What time frame is around that target that I got here? You know, like your 7-day. I mean, I don't know what time frame it's going to be. I don't. 18-day? I don't know. I don't know which one it's going to be. You got your Mayo. You got a brand new 200 EMA on the 18-day time frame. All right. So, you know, maybe you want to hold the 18-day VWAP. I don't know. It doesn't matter. You can play the price action. Don't go on crazy leverage. But a spot buy at 39 cents to 36 cents is probably a good idea. You know, and then you set your stop at 37 because if 37 is a bit of a concern. Or just underneath these closes here at 33.6. You know, you can set a stop there. If you get stopped out, whatever. If price comes back into the range, you can re-enter at 36. It's not always bad to buy higher, right? Just don't wait till 40. You know, buy back again at 36. But yeah, kind of exciting stuff for XRP. Super duper excited on this, and we'll see what this yearly chart looks like, and when things are over. Hopefully, you know, that's just the swing high for now, and we come higher. That'd be great. So yeah, I hope you enjoyed the video. If you watched it, awesome. You came in. I appreciate anybody that liked it and hung out with me. All right, take it easy. XRP to the moon by July 18th. We'll see. Peace out.